Hi, this is Zach here with the Bulletin Board Heroes here at Zach's Traders Cafe, waiting for the spring budget, where we're all looking for a cut in national insurance, income tax, and the abolition of inheritance tax, and the British ISA. Starting off with the FTSE 100, where we've got this potential triangle in place now, where the top of the triangle there around 76.80, so looking for an end of day close above that, to give us a move towards the 78.40 level now at the top of that August rising trend channel. Only below the floor of that triangle there around 76.06, really implying that we have to test the 200-day line at 75.40. In terms of the RSI, we've had two bounces now at the RSI 50 level, so that this should mean that there's enough of a leading indicator there to take us through to the 7800 plus level. Moving on to the DAX, and here the market still outshining the London market by quite some distance. Here you can see that we've had that resistance line there, the red one there from back in September. 17,800 the level there. Above that we're looking for as much as 18,400 by the end of next month, giving it a bit of time. Obviously it could happen by the end of this month. On the downside, not expecting much below 17,400. Worst case would be the floor of the channel there from October, 17,200, but we're still looking upwards and looking at the latest consolidation as a mid-move consolidation after the two gaps higher that we've been treated to. Moving on to the Dow, where it looks like there's a bit of nervousness in terms of the prospects of Trump being president again, but we already factored in that we might have to test the 38,000 area and the area of the 50-day moving average, the blue line there, and that may be coming to pass at the moment. I'd like to see the market get back within that rising trend channel from October, around 38,900, and then make progress up towards 41,000 plus, perhaps by the end of next month. The obvious thing to do now though, is to wait for a clearance of recent resistance around 39,200 before assuming that a new leg to the upside is on its way and that we will not test 38,000. RSI is also shock horror gone back below the neutral 50 level, the first time it's done that since the beginning of November, so maybe there's a message there somewhere. Moving along to Bitcoin, which managed to get temporarily to a new high yesterday. Current situation is that we're still looking for 70,500 at that May resistance line projection as a near-term target, and after that maybe we can upgrade everything. In terms of the support, the old resistance, initial resistance around 63,000, now becoming support. Has done that intraday so far today, and expecting this market to remain at least on the right side of 60,000 ahead of that 70,500 target that we were looking for by the end of this month, and I suppose we can still get that by the end of this month. Record for gold, for Bitcoin rather, and also record for gold as well. We were looking for 21.80 by the end of this month, and not too far away now, just $40 or so. The upside value is certainly while we're above the 2100 level, which was the old December peak, and as I said, the top of that channel there, 2180, hopefully during the course of March. The way things are looking, obviously looks as though we're going to get much more than 2180, but let's not tempt fate. Moving on to the stocks, and I covered active energy this time yesterday, i.e. between 10 and 11, and shares have more than doubled since then. I think it was around 0.65. We've been up to 1.47. Nice to see that, obviously, and also the good news at the moment is that our previous target around 1 pence now looks like it's coming in as support. The low today 105, almost exactly on that target line of 105, and above that there's a possibility of filling the gap up towards 1.7 pence. Best case by the end of this month up to 2.2 pence, and that red December resistance line projection. But the upside certainly looks decent here while we remain above that 50-day line, 0.96 at the moment on an end-of-day close basis. The final point to note is that this was one of the best setups that you can have, i.e. a bear trap island reversal, so gapping down to new lows and then gapping up after that and rallying hard. On to Avacta, where it's head-scratching time in terms of today's decent announcement from the company. It's sort of business as usual, but what's interesting here that the price action seems to have got rather dull, just above the placing price of 50 pence. I suppose, presume some people took the chance of getting out with a little profit there. Still the risk while we're below the recent resistance at 55 pence for a new leg down towards the 44 pence level, which is a support line projection from this time last year. But while we're above, the longer we spend above 50 pence, obviously the better here. But that is the downside risk at the moment, down towards 44 pence. End of day close above 55, and then we can be filling the gap up to 67 pence. On to Artemis, which has had a decent announcement today, and here gap off the lows. We already had an unfilled gap to the upside off the lows, and that was actually a bear trap island reversal, so that didn't actually work very well in that brief 2-day rally. Could have a repeat of that while we remain above the floor of the gap there at 0.83. Looking for initially the 50-day line at 0.97, and then best case at this stage up to the rising 200-day moving average at 1.12. Next up is a stock which has exceeded expectations, which is always nice. Here we had Challenger, which I've been talking about quite a few times in the recent past, January, February. We were looking for up to 0.15, and you can see that the shares have blown the doors off. Upper parallel of the rising trend channel from September was up at 0.22, and we even exceeded that. What will be interesting to see is whether we can get an end-of-day close above 0.22 and then retest today's intraday resistance at 0.28. So full marks to that stock. And regarding this as a bullish situation, while we remain above the top of the gap there at 0.17. On to Creo, which is not quite as exciting, in fact maybe quite the opposite, but here interesting price action bouncing off that uptrend line there from this time last year around 30 pence. End of day close is above the rising 200-day line of 34 pence, suggests that we could retest the best levels of the year to date at 49 pence by the end of next month, or even sooner, ideally by the end of this month. But the key is staying above that rising 200-day line. Onto a stock that hardly anybody looks at apart from me, which is Celsius Resources. Here it looks as though we've got a broadening triangle base. We've got a rising 50-day line as well at 0.59, and above the December resistance at 0.65, looking for 0.82 by the end of this month, or maybe the way things are going, by the end of this week. The rebound in gold has obviously helped some gold stocks, including Hummingbird, where I think we interviewed the company there around 8 pence. It's already up to 10.25. And initial target here, the 50-day line at 11.25, hopefully by the end of this week, and ideally we get up to 14 pence sometime later this month. But the key is holding above that 50-day line at 9.25 pence. Interesting setup with Immupharma in the sense that we've had a bear trap island reversal, which is, as I said, one of the strongest setups there. So gapping down there back in February and gapping up to start March. We've already hit the initial target there, which is the top of that broadening triangle from the end of January, as high as 1.6 pence. Above that, and we're looking for the 200-day line and the major resistance there for the shares at 2 pence. The ideal scenario here is that we remain above the top of the latest gap today, 1.22 pence, ahead of the move to 2 pence on that situation. Another stock which I seem to be the only person who looks at it is Itaconix, and here, after the mid-move consolidation and the bear trap gap reversal from the end of last month, we're hanging above the 200-day line at 165 or 164. Above that, looking for as high as £2.35 by the end of next month, the top of that broadening triangle from the end of June last year. One stock from Aquis, which may be worth looking at the moment, is Kasei, and here it looks as though we've got a broadening rising trend channel base rather. Top of that rising trend channel at 13.5 pence. We're looking for that by the end of this month, while we remain above the broken January resistance at 9.15 pence on a mid-price basis. You can see there's been great price action at and above the rising 50-day line since the autumn on that situation. Couldn't resist looking at Kodal again, given that it's private investor clickbait. Here you can see that we've got break of that resistance line there from December at 0.35, rising 50-day line, so it looks as though we've got the top of that falling trend channel from April at 0.57 locked in, and hopefully we'll see that by the end of this month while we remain above the 50-day line. We saw, or we've seen, Hornby rise over the recent past, and it might be the case that another household name which has fallen on rather less good times could be the next one to rise. Here we've got Mothercare on a rising trend channel from September, 9.5 pence the top of the rising trend channel there, looking for that by the end of next month or even sooner. Narf is next, and here you can see that we've had a near vertical move over the last couple of weeks, unfull gap to the upside. In fact, we've had two of them, and that came after the gap down that we had back at the end of January, so in a way it's a bear trap island reversal. Got the 50 and 200 day lines both rising. We've hit the first target there at 1.1 pence. Above that, we're looking for a 1.35 pence target, hopefully later this week, and maybe much more for the shares given that sharp turnaround and the fact that we're in the run-up to a golden cross buy signal, so the 50 and 200 day lines both rising. They should cross over the next week, and hopefully that will be tying in with a peak for the shares. On to the last three. First one is Andrew Bell's Red Rock Resources, and there was an announcement from the company today which seems to have helped the cause. A bit of a bear trap rebound from below the old January support there, 0.07. Above that, we're looking for a retest of the 200 day line at 0.12 by the end of next month, giving it a bit of time. Best case would be 0.2, but obviously it would depend what could drive the shares that well after their recent bear run. On to Scancell, and a sort of pandemic favourite. Here we've got a rising trend channel base, broken above the 50 day line as well at 11 pence. Looking for 16 pence by the end of next month, although there is the big barrier of the 200 day moving average at 12 pence to consider. In the meantime, ideally we stay on the right side of 10 pence anyway. Finishing off with Synairgen, and here the situation is that we are bumping along the bottom, still need to get an end of day close through the 50 day line at 5.6 pence to give us at least the chance of retesting the December resistance zone at 8 pence by the end of next month, but early days there for that situation. That's it for me today. More updates tomorrow.